Welcome to Token Topics. XDC Network and trade finance and more are the topics. We're going to hear words from André Casterman on the Electronic Trade Documents Act and reducing the trade gap, and on Web3 technology and more. We're also going to go into some reports from the Bank for International Settlements, and we're going to watch a clip of Larry Fink, the CEO of BlackRock, that's very bullish for crypto indeed. If you enjoy the content, please hit the like and subscribe so you can stay up to date. With that out of the way, let's begin. Keep your crypto safe with a DCENT biometric hardware wallet. With talks about cyber attacks or exchanges going down, it's imperative to keep your assets safe. And just know with DCENT, your private keys are your private keys and only you have access to them. In the description below, I'm going to put affiliate links where you can receive $30 off the retail price. There's also a 2-wallet package deal that's a great value. There's no need to wait. Order your wallet and keep your crypto safe now. Don't forget to check out the latest Token Topics interview of Crypto SENSEI. We talk about a wide range of different topics, such as the new messaging standard. We talk about digital assets, preserving your wealth, and more. Go ahead and check it out. The link's in the description. Recently, Larry Fink, the CEO of BlackRock, he had some words on crypto. He believes that it's going to play a pivotal role in a flight to safety.
Is way beyond the rumor. I think the rally today is about a flight to quality with all the, all the issues around the Israeli war now, global terrorism. And I think there's more people running into a flight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
All right, we're going to check out this recent episode of Trade Finance TV. In this special clip, we're going to hear from André Casterman from Casterman Advisory. He's also a board member of the International Trade and Forfeiting Association. He's part of the D&I initiative. He has a lot of experience with SWIFT and particularly in trade finance. He knows how trade finance works, and he is particularly interested in promoting Web3 technologies in the trade finance field, and he promotes the XDC network through Trade Tech. So we're going to hear his take on the Electronic Trade Document Act and what we could be looking for in the future and what's currently going on right now. Let's go ahead and hear from him.
So we've all been in this business for a few decades. Many trade processes have been digitized. So we really have to take stock of what the work that has been done by technology players, banks, of course, and the adoption that corporates have been able to enjoy. Take supply chain finance. It has been digitized from the start. It's a critical open account. It's probably the most successful use case when it comes to adopting a new way of funding corporates and SMEs. Take compliance, AML compliance, very digitized as well within banks, and also doc checking processes. Now, where we faced issues is when we started to create new instruments in the most complex use cases. We have all been working on various initiatives to digitize the letter of credit. 10 years ago at Cybos, corporates were saying the letter of credit is dead. And here we are, 2023, and we see that the letter of credit is thriving and more being processed in a digital way. I think the key challenges we faced is that we were trying to create new instruments rather than taking the existing instruments and improving them incrementally. So creating, new instruments, even in the right way through ICC standards and rules. That's the right way to do it. But creating new instruments is quite hard for banks to take on, and for the corporates also to take on and adopt. And also we were focusing on the most complex ones, like conditional payment undertakings. Whereas with the ETDA Act here, we're focusing on unconditional payment obligations, which are very close to what the market has done with supply chain finance. So delivering irrevocable payment undertakings to the funders on the back of an approved invoice on the buyer side. So I think there is much room to be positive here on the adoption of the ETD Act and the electronic prom notes, bills of exchange, and also on the logistics side with the bill of lading. Developments taking place in G7 countries like France, US, and Germany are critical on this. I think the problem we have to focus on as an industry is the SME financing gap, your third pillar, open account, where whether you're a large bank like Deutsche Bank or an SME working capital platform, you're trying to extend liquidity to those who need it. And there is the problem in the industry, the 2 trillion funding gap, and the ETDA Act with the electronic promissory notes and the bill of exchange can help in that particular use case. It's important for any kind of funder because it's all around indeed funding the last few weeks of the payment of the invoice having been approved preferably by the buyer, potentially covered by credit insurance. And any funder, as I said, large bank or smaller non-bank originator like those supply chain finance platforms will benefit from this development. Also the ones in the distribution space, asset managers, institutional investors will also recognize that a standardization as offered by the ETDA Act on irrevocable payment undertakings is definitely beneficial to them as well, because they are there to fund the funders, basically. There are multiple custodians, banks, platforms, electronic bill of lading platforms, all those islands try to be custodians, but the key is to make them interoperable so that an electronic bill of lading or a bill of exchange or prom notes or even a warehouse receipt can really navigate from one to the other party. And that's where the trade finance world has the opportunity, and we have proven it with early adopters like Lloyds Bank, to get to a point where you take advantage of indeed new technologies like Web3 technologies, where digital assets are basically the single source of the truth, whether they are being processed by one platform at one point in time and a few minutes later being processed by another platform, another bank. So Web3 technologies could become the glue. That's definitely what MLETR suggests as well, to have really an interoperable framework. On the European Commission side, this interoperability is really being well understood in another context of the GAFAs, where they're looking at interoperable messaging in the retail space. But definitely that's what we see with early adopters of electronic bills of exchange from notes and some new entrants in the electronic bill of lading world. That really want to demonstrate how interoperability can be achieved. An example, if Cargo X, a new entrant in the electronic bill of lading, really demonstrating that they want to interoperate on the basis of digital assets. And I mean, the issue we're facing, not only on the banking side, but also on the platform side, is many incumbents don't want to change. Don't want to open up, don't want to interoperate. So we need new entrants to show the way, using new technologies, AI, some Web3 and so on, and putting pressure on the market, or at least attracting user adoption in order to start kicking off the process. And certainly at the interoperability level, that's what we see today.
They'll just continue to evolve as the technology evolves, is that right?
Oh, absolutely. I mean, one great thing about the ICC rules these days is they're no longer in versions that are only updated every 10, 15, 20 years. They're now in version numbers. We started the EUCP with this, we now brought it with the URDTT. What it means is when we have a revision process now, we can do it in a matter of months rather than years. Good. We proved that quite recently with an update to the EUCP. Where we made many of the definitions more Melita compliant, which, by the way, also means ETDA compliant as well. So, yes, we have to monitor what's going on. It's very important. A couple of points. First of all, that Andre's mentioned, and also was mentioned by Stuart, this fact about change. I always like to use the phrase inertia of tradition. In other words, this is how we've always done it. It's easier to maintain the status quo. It's not quite a resistance to change, but there's perhaps never been a convincing enough argument to the market to make the leap. And I'm hoping that the ETDA, among other things, will accelerate the move to this leap. And regarding the single source of truth, obviously we're going to need some kind of method that will aggregate the data from many sources to a primary single source of truth location. And one area we can look at that is the ICC Digital Standards Initiative, and they're compiling what we call a digital standards and data elements analysis for 7 key trade documents. That's what we're beginning with. The result is going to be a glossary of key trade terms with recommended standards. But the reason I mention this is that the significance of the projects is that data elements, when shared, could form this single source of truth. And that will enable transactions that are needed to move along the supply chain, as well as trade finance processes. So bottom line, although technology is a real imperative enabler, the fact is without the common standards and the aligned legislation, digitalization is going to remain within a number of private clubs.
Exactly.
And that can't be the future.
All right, this is from the Bank for International Settlements. Now, this is talking about the year 2027 and cross-border payments. Now, there's a lot to ISO messaging, the 200.2.2 new messaging standard. It's more than just digital assets. A lot of people tend to get overexcited. But with that being said, digital assets is part of it. But a lot of these financial institutions, especially this November, we don't know how many, if any, are going to be using digital assets. We really don't fully know. I'm not going to rule it completely out, but there's a lot of companies, these financial institutions, that are stating that they're going to be using the message-enriched features, not the digital assets, but they will eventually get to that. So with that being said, it's still an excellent window to wait for and to look for. November on, and check this out. So this is from the Bank for International Settlements. The bank, or the BIS Committee on Payments and Market Infrastructure, CPMI, has published harmonized ISO 200.2.2 data requirements that establish a consistent minimum set of messaging standards for more efficient processing of cross-border payments. The requirements will facilitate the straight-through processing of end-to-end payments, making them faster and more reliable. They were developed in collaboration with the Private Payments Market Practice Group for use in cross-border payments transactions. These technical requirements will ensure that we are able to grasp opportunities for more efficient cross-border payments afforded by richer and more structured international messaging standards. They are an excellent example of the type of practical impact the G20 program can achieve together with industry to make cross-border payments faster, cheaper, more transparent, easier to access by 2027, said John Cunliffe, the chair of the CPMI and Deputy Governor for Financial Stability at the Bank of England. The increased adoption of ISO 200.2.2 by payment systems around the world is a major opportunity to improve their interoperability, but this opportunity will not be realized if jurisdictions implement the international messaging standard for payments in an inconsistent way. So that's a big thing, is everybody has got to be consistent on this. So market participants are therefore encouraged to begin preparations to align with the harmonized ISO 200.2.2 data requirements in earnest and by the end of 2027 at the latest. So that's like the deadline right there. But we know that even in 2024, there's some great dates to look forward to as far as like even chips. And then we have FedWire going live in 2025. Most likely that's going to be the live date with the cross-border, with the CBDC. So a lot to look forward to, and even 2027. So if you're holding these assets long-term, you have to start thinking about long-term, especially with these particular assets. I'm not talking about Bitcoin. But anyway, continuing here, the implementation of these data requirements will require coordinated efforts across the global payments community, but the entire community stands to benefit in the long run, right there, from a convergence on these shared data practices. All right, so if you're interested in wanting to read this, I'm going to put the link to this article down below. Global value chains are extremely important moving forward. This is from Blockchain Supply Chain Association. They highlighted XDC's decentralized Oracle Go plugin. So that's extremely bullish. This is a document from the Bank of International Settlements. So mapping the realignment of global value chains, Bank for International Settlements. So global value chains have undergone significant realignment in recent times. The COVID-19 pandemic exposed severe strains in global value chains, resulting in supply chain bottlenecks and disruptions to key supplier relationships. The Russian invasion of Ukraine and ensuing debates on nearshoring and friendshoring have further highlighted the importance of building shorter, more resilient supplier relationships, especially for critical inputs to key industries. So that is extremely bullish right there that they highlighted that. Well, everybody, I hope you enjoyed the content. If you did, please subscribe so you can stay up to date.